Good afternoon, everyone. Thanks for joining us again. I'm Hannah from the Bangor Public Library, and we are here for another installment of our series we do in collaboration with SCORE Northern Maine. Today, we're going to be talking about how to be a great bank loan applicant. Before we get started with that, I'm going to hand things over to Donna from SCORE to share a little bit more about their organization and then introduce today's speaker.
Thanks, Ann. Talk a little bit about SCORE. I don't know how many of you really know the organization. We're a completely volunteer organization. We have about 120 mentors in the state of Maine, and all of our advice and service is free. So we help people, whether it's a business loan or whether it's how do you want to do business or we need marketing help. We kind of help people in any part of their journey, as an entrepreneur. And whether you just have a business idea or you've had your business for 10 years, we can help you. And it's really awesome to have the 120 people because if I don't know something about marketing, which I don't, then I can call on another SCORE mentor who really actually knows what they're talking about. So a lot of times we have other people join the team. If you're at all interested, just go to score.org and you request a mentor. You just tell a little bit about your business, and then someone will contact you, and we'll get the journey started. And I also want to say, I mentioned to Hannah and Nicole at the beginning of this, is SCORE has organizations, chapters all over the country. And our chapter, Northern Maine, of which I'm a part of, there's only 15 of us. We got chosen as chapter of the year for the nation. And so we're pretty pumped about that and ready to do even more work for our clients. So with that, one of the things that our clients often are very worried about is going to the bank for a loan, right? Pretty intimidating. And how do I get started? I don't know much about this. So we actually do this every year. Nicole has been really gracious about it. She has been a community banker for over 20 years. So she's seen it all and done it all. And we're truly looking forward to it. This is a small group, so I would really encourage you, whether you come off mute and ask questions or whether you just want to put them in the chat. This is your chance to talk directly to a banker and ask those questions you always wanted to have. So with that, Nicole, thank you, and we'll get started.
Yes, my pleasure. Yeah, so because we are such a small group, I do think normally I would say let's hold questions to the end. But for now, if you want to pop questions in the chat and we'll sort of check in throughout the presentation, or raise your hand and Hannah will let me know if I don't notice. We can kind of talk about things as they come up because we have such a small group, and I think we'll have plenty of time to do so. So as Donna said, my name is Nicole Morgan. I am what we call a community banker for Camden National Bank. I also am a college adjunct instructor. I teach for the College of Business at Husson University. I've taught for UMaine, and I've taught business courses at Eastern Maine Community College. So education and small business are just a really big part of my makeup. It's what I do literally every day. So I really want to thank SCORE for having me back to do this workshop. I'm going to try to stick to the agenda as closely as possible. And I think this is a really important topic for us to cover. Besides understanding your business itself, this is probably one of the most important things you can learn about early on in your business cycle. So let's go to the next slide, please. So first things first, I really do hate it when people use jargon. So I'm going to try really hard not to use jargon during this presentation. If there are terms that I use, if I slip up and I use a term that you're not familiar with, that's a great time to raise your hand, pop it in the chat and say, what do you mean? What does this mean? I'm going to start by defining what we call a small business. You might also hear the term Main Street. And it's a commonly used term in the banking world, and it really just refers to our small businesses. So when you think about the main street in your town, you're walking down the street, and on one side is your laundromat, and on the other side is your bakery, and then your sandwich shop, and your accountant and optometrist. That's your main street. So it quite literally means what is central to your town for a business for a business environment. At Camden, the community banker, that's who is going to help you focus on being a good Main Street customer. And we're going to be, for all intents and purposes, your Main Street banker. So my job in my professional role is to assist you with all aspects of your financial needs. And that does also include your consumer needs. So I help with your overall financial health and wellness. So most people start their small businesses because they have this thing that they're really passionate about. So you really like to bake cakes. This is the example I like to use, and it always makes me hungry. You're great at baking cakes, and everybody tells you you're great at baking cakes, and you should do this for a living. And you're like, hey, I hate my job. Let's do this for a living. That's what we call the euphoric period, for you to realize, I love doing this, but it takes a lot more to own and operate a business than just being great at baking those cakes. So what I want to cover today is a really important part of that other stuff, and that is applying for a bank loan. So you've gone through the process and you have your idea. I'm going to bake cakes. And now you realize, well, I don't have enough money in my checking account to buy a building or rent a building and buy my equipment, and my mixers are expensive. And so you need funding. It's very typical early on in the process for every small business owner. So I always tell people, when you're in that startup mode, this is new, you're just sort of delving into small business ownership, you really need to go in eyes wide open. It is not for the faint of heart. Some SBA statistics, potentially alarming statistics, 90% of startup businesses don't make it. So, and this is across all industries. This isn't specific to some of those high risk industries that we think of. This is really just broadly, 90% of startups don't survive and turn into a seasoned, mature business. As you continue on in your business cycle, the statistics do get a little bit better, but then we have to look at the next reason why businesses don't make it, and that's lack of money. So another SBA statistic, 1 in 4 businesses surveyed by the SBA say they didn't survive because they weren't able to receive the funding they needed. So they felt like it either limited their growth or really just their ability to operate. And they blame that on being the reason why they don't make it long term. So it's a very big deal. It is a very big topic for us to be talking about. And as you can imagine, before you go to a bank or even an investor, and I'm going to use those two terms somewhat interchangeably, because some of you may be looking to borrow money from a private institution or a equity investor, a capital investor. So I want you to sort of understand that this is broadly what anybody who's looking at supporting your business, this is the stuff they're going to be looking for. But before you ask anybody at all to borrow money to help support this dream of yours, you really want to make sure you're positioned in the best place possible to make your case. So we're going to put some work in today. Next slide, please, Hannah. So this is our agenda for the day. I really wanted to make sure that our time was going to be as valuable as possible. So when I first created this presentation, I really put some thought into what are the things that come up every time I meet with a customer and they think they're ready for a loan application. And what I have found is it's not really the application that causes people stress or turns people away from applying for financing. It's the angst of not understanding what's being asked of you. So, an application is easy. The preparation for the application is where the blood, sweat, and tears come in. Hopefully no blood, sweat, and tears, but that's where the work is done. So I also want to put in the disclaimer. These are specifically what I look for in my role to prepare for financing. This is what I'm going to send a customer away with for homework. but they are pretty standard. So, they may deviate slightly from financial institution to financial institution, but I don't think you're going to see them deviate much. These are pretty much cornerstones of any financial request. So these guidelines, of course, help ensure the safety of our investment. We're investing in you as a customer, as a business, but they're also an extremely important exercise for you as a business owner, to ensure that you are positioned well, and to have future success for this idea. So the 5 steps, we're going to start by determining your business status. Are you a true startup, or is a lender going to consider you a seasoned and established business? So you remember the statistic that I shared just a minute ago regarding the failure of businesses. It really does stand to reason that the work that a new business is going to have to put into this process is quite a bit more than a business that's already established and has consistent profits. So next, I'm going to ask you to know your business. You already know your business, but oftentimes that is one of the hardest parts to this process, is taking all of that knowledge out of your head and putting it down on paper so somebody else understands your vision. And you want that potential financer to really comprehend your product, your process, whatever it is, and ultimately feel comfortable getting behind it from a financing perspective. I'm going to ask you to know your ask. So I think I need $50,000. That's not a good, solid ask. A responsible borrower is going to be able to account for every dollar. So the need and the purpose of the funds, not only the lender's funds, but your own funds. So you're going to be putting money into this deal as well. And we want to know that you've put some thought into what that will look like. I'm going to ask you to know what your business is worth. So we want you to pay really close attention to your financials. You're going to put together some projections. That might be a new term for some of you. Don't worry, we're going to talk about it today. How long until you turn a profit, or will you turn a profit at all once you've gone through all of this work? Maybe you'll find that you don't. That does happen. I'm going to share some tools with you to sort of do those mathematical calculations. They're very fun, very easy plug and chug tools. So I think you'll find them useful. And then probably the most important, but one of the most overlooked, is knowing your personal credit. There is this common misconception that small businesses stand on their own, that we don't look at your personal credit because it's the business that's applying for credit. And that's just not, unfortunately, the way it works. Even big banks, little banks, everybody looks for you as the business owner to personally guarantee any finance requests. So we're going to talk about why your personal credit matters and hopefully make sure it's in tip-top shape for your lender. Okay, next slide, please. I need to take a sip of tea. All this talking. So again, I'm planning to have time for questions. Interject if you have questions throughout this process. It's a pretty in-depth agenda, but I think I talk pretty fast and we'll get through it pretty quickly. So, again, interject or save your questions for the end, whatever you prefer. But okay, so first things first, is my business established or am I a startup? So jumping right into determining this is an established business, you've weathered some of the storm, right? You may not have turned a profit yet, or you may not have turned a large profit, but you've seen some ups and downs. You're well into your business cycle. You've got a couple of years of financials behind you, regardless of what those financials look like. And you've demonstrated at least a certain amount of business acumen. So I'm not just good at baking cakes, I'm good at the operations side as well. How do we demonstrate that? Well, 2 years of tax returns is kind of that checkbox minimum. And the request, so this is where it gets a little bit complex. So you've got your 2 years of tax returns, but your financial request should also be to directly support whatever the business industry is you're already operating in. So an example is that bakery could be looking to purchase another bakery. So you'd like to franchise your bakery. That's considered an expansion of an existing business for most banks. So not going to put you in startup, excuse me. A startup is really anything less than 2 years old. So that's why those 2 years of tax returns come into play. But let's say I've owned my business for 10 years. I've baked cakes for 10 years, but I want to buy a doggy daycare. That's when it becomes a little bit more of a gray area. More than likely, you're going to be treated as a startup because it's not the same industry. You don't know maybe as much about that industry because your experience is in, hospitality or quick service restaurants. So more than likely, you're going to be subject to the little bit more stringent requirements for financing a startup project versus an established business. So I'm going to pause for what I think is a pretty common question when we get to this point regarding startups and corporations and tax returns. So let's say you've been a sole proprietor with your cake baking business and you file a Schedule C, which means I am the business. But you have recently been given guidance by either your CPA or your attorney that you probably should protect yourself. Your industry has now become a little bit more high risk. You should put all your assets in an LLC. Does that make you a startup? The short answer is it really depends. Probably not, but it's something you would want to discuss with your financer. You'd want to explain the logic behind why you changed your filing status. What any changes, the assets change at all. It really will be determined by whether or not there's any material changes to the way you're doing business day to day. So if today I bake cakes and I'm under Susie Bakes Cakes, or Susie Smith rather, doing business as Susie Smith, and tomorrow I'm Susie Bakes Cakes LLC, but I haven't changed anything that I'm doing, more than likely your lender is going to say, no, you're still an established business. We don't have to go with startup. But again, those are questions when you're looking to take the next step in financing, you'll want to have a conversation about. Next slide, please. So knowing your business, lucky for you, this is both the easiest and the hardest part. So for everyone who's passionate about something, it can be difficult to articulate what that something is to others who don't share your passion. So while as your banker, I'm totally on your team, I may not be an expert in what it is you do to make money every day. So I'm not an expert in how to make the perfect buttercream frosting. I am a avid taste tester, but I'm not an expert. So I'm not going to know what your margins are for your product. I have access to generic data as well, but you know your product, you know what it sells for. I may not know who your customer base is. So it's really important for you to share all of your details that you as a business owner know. Sorry, someone's messaging me. I forgot to put on Do Not Disturb, so I'm getting messages from my coworkers. So how do I do this? How do I articulate what my business is and all of my financials and all the products that I have? Well, you do this by creating a business plan. So while each business is unique, no two businesses operate exactly the same way. Business plans sort of streamline the information that a banker or a financer or anybody that is going to be on your team will be looking for. And it really helps you to communicate the value of your business, how you plan to make that business really happen. So the feasibility of the business, why you're going to make money. That, believe it or not, some people don't know that it's going to cost them more to make their product than the market can actually sustain for a sales price. So these are how you articulate all of the different things that make this business a good business for somebody to back. If you're not sure how to approach this task, of course, there are tons of resources. The Google will give you anything you ask for. But it can also be a little bit overwhelming. So I'm going to put in a plug for SCORE. That is what they do. Your SCORE mentors are going to sit down with you, and they've done this. Many of them have done this for years and years and years, and they're going to pull all that out of you, and they're going to help you put it on paper in a way that is clear and articulate and really tells your story. If you really feel like you want to go it alone, I would still recommend going to the SCORE website. They have a ton of free templates that will at least get you started. But I strongly encourage you, sometimes we make things harder on ourselves than we need to when we're first starting out. Use the resources that are available to you. They really, truly are free. They really, truly are experts. So I think Donna can get you in contact. I did share some links at the end of this as well, but Donna's a great person to reach out to if you have any questions about connecting with SCORE. And next slide. So know your ask. Understanding how much money you need also sounds like one of those no-brainer topics. But it's a question that customers and business owners really find themselves stumped to answer. There are no magic tricks to determine how to best calculate this. The best thing to do is really just to put pen to paper and write out everything you're hoping to accomplish, and then write out how much you think it's going to cost you to do these things. And then on the other side of that paper, how much money do I have? So here's how much it's going to cost me to do everything. Here's how much money I have. And the gap is usually fairly substantial. Well, that's your financing request. You also may not know how to ask for, how do I want to structure my financing request? And that's completely okay, because your lender, they're going to know. So don't feel like I need to know exactly how to structure. I need a line of credit, or I need a term loan. Those aren't the things we expect you to come in knowing. We expect you to come in and say, I need this much money to get off the ground, and then we're going to help you structure the rest. And I think oh, okay. No, I thought I missed can I have the next slide, please? Thank you. Sorry. So one way that we do that is a document called a sources and uses funds table. So this ultimately does end up in your business plan, but it is something that you have to create based on the research that you've done to get your business off the ground. This is a little bit more of it's a big ask, obviously. So it's a $5 million purchase. But I do like this. While most of you won't have a $5 million purchase for your initial startup requests, if you do, I'd like to talk to you. But I do like this table because it is very clear what the money is going to. And that, again, is the objective behind this. It's for you to understand how much money I need, and then for you to really figure out, all right, well, where is it all going to come from? This will also help the bank to say, we can support this much of your undertaking. And then we'll get into some other alternative resources if the bank can't get behind fully. So we'll just kind of break this down really quick. So in this particular case, we've got a $5 million purchase price, and the borrower has $370,000 to put towards it. So they've scrimped and saved and eaten ramen noodles, and they have managed to set aside $370,000. Then they've got just this really great distant relative, who they didn't know wanted to support them, but that person wants to give them $200,000 in gift funds. Without getting too into the weeds with some of these, gift funds really truly do have to be gifted. They are not supposed to be like wink, wink under the table, you'll pay me back. You will, for a gift to be documented properly, and that's why it says documented gift, you do have to sign a legal document that says there's no expectation of repayment. And then there's a seller note. And again, I don't want to get too into the weeds with this either, But a seller's note is an arrangement where essentially the seller knows that there's going to be a gap in financing, that you don't have enough money to put down a full 20%, and the bank is only willing to put in their 80, 75, 80%, whatever the percentage is. So a seller might say, I'm going to take a seller's note, meaning you can owe me whatever the gap is. So in this particular case, the gap is $285,000 because the SBA has stepped in and said, we will lend. And for these purposes, the SBA is the bank. The SBA has said, we will lend 4.8 million, and you've got to figure out where to find the rest. So if you start kind of from the bottom, the SBA says we'll lend 4.8, and then here's all the other ways that we're going to fund this transaction. Now, it doesn't add up to $5 million. Why is that? Well, let's go look on the uses side. And that's where we see this is breaking down into 2 million of this is going to be buying the actual business. So this is sometimes referred to as goodwill. It's the book of business. It might be the customer base, any future revenues, if it's a something where you have to subscribe or anything like that. That's what the business acquisition includes. It also could include inventory, supplies, any of that. Then 3 million of that is going to be used to purchase the actual physical real estate of whatever this business is. Then we've assumed that you need 500,000 in working capital, because the day you unlock the doors as the new owner, you need to be able to pay your employees and you need to be able to buy your own inventory. So you need some money to start this. Then we used an SBA loan for this. So there is going to be an SBA fee. There was a beautiful stretch of time in which the SBA was not charging any fees. We are outside of that window now, unfortunately. So I could do a whole class on the way government guarantees work. So I'm not going to get too into that. But it's a way that we get deals done as bankers for startups or high-risk industries. So there's a fee there that you're going to need to pay for the privilege of taking out an SBA loan, and then your closing costs, which are going to include things like appraisals and titles and recording fees and all of that fun stuff. So the sources and uses is, where am I getting the money? What am I spending it on? It's a nice way to make it clean and easy. And next slide, please. Okay. So know your business's worth. So a lender or investor is going to want to know that their money is safe with you. So everything that we've covered so far is to help you paint that picture. But a good idea is also only a good bet if it makes money. So this is where you're going to show that all that work you've put into your business plan and my sources and uses and all of this is going to help me make enough money to at least pay my loan payment, and hopefully a little bit of cushion. So most banks are looking for you to generate enough money to pay for the loan itself. So we want the business to stand alone. There are some situations in which if you are a multiple business owner, some requests and some banks will allow you to do what's called a global cash flow, where we let the businesses kind of interweave and pay for each other, but it's not ideal and it's definitely not where we would want to start. We want you to create an idea that pays for itself, because it's never a good idea to put you into a position where you're bleeding money and you need to find that money somewhere else. So the way that we are doing that is we're looking for you to provide us with tax returns. We want personal tax returns and we want business tax returns for any other business that you may own. You're also going to want to get really down and dirty with profit and loss statements, which are a snapshot in time of what you are making and what you owe at any point during the calendar or fiscal year, whatever you decide to do. And then a balance sheet is something that a bank will ask for that helps us to show what you are worth. So what are you worth on paper from an asset and liability standpoint? Your balance sheet is also typically a snapshot in time. Those are things that as an established business, you should have some familiarity with those. If any of that was new terminology to you or you're not super great at it, again, a SCORE mentor, we have some SCORE mentors that help with startups. We have some that help with expansion and growth, and we have some that help with struggling businesses. So we can find someone to connect you to that can help you sort of get a handle on what your financials look like. For new businesses, it's a whole other ballgame. So we're looking at creating projected financials and what we call corresponding assumptions. So this is a jargon moment. I understand that. Assumptions are projected financials are exactly what they sound like. You're creating financials that you think are going to be real someday. Assumptions, they're the reason they're real. So for example, an expense that I would expect to see on your projections is insurance costs. Because if you bought a building, you're going to need to insure it. So how do I say, well, that projection for insurance is real? I'm going to have a corresponding assumption that says I called my insurance agent and they gave me a quote. So the projection is your make-believe number. The assumption is why it's not make-believe. Next slide, please. So I didn't just glaze over projections. I wanted to get to this next slide because this is the plug and play projections template, it's an example of a plug and play projections template that you can use. So if you look at, my eyes are really bad. So I know that this might be hard to see for some of you. I think this presentation will go out so that you can make it bigger as well. But if you look at the top line items under income, we're looking at where is the revenue coming from. So we've got revenue, and then we've also got under revenue, we also keep cost of goods sold. So your gross income is going to be the difference between those two. So you might break it out differently. For this purpose, I just did a very general revenue, but you might have sales, you might have returned items. There's lots of different line items that you might have depending on your industry. So again, don't think that this is the only way to calculate these income and expenses. We just kind of have to start somewhere for the general order. I also think we break them out by month. You'll notice that I've got 12 months. Your bank is probably going to look for somewhere between 24 and 36 months of these financials. And that's key because that is enough to demonstrate I have put thought into my first year, my second year, and by the time I get out of my second year and go into my third, I should show some stability. So we're going to expect to see, it's okay to see months where you don't make money in the first year. We're going to expect it. And if you aren't showing months where you don't make money, we might question the authenticity of the projections. And we're going to look for really good reasons why, boy, you made money as soon as you opened your doors. That's amazing and very unusual. So the monthly exercise is really, really important for you as well, because there might be some months where you're like, oh, I'll have a really good customer base in June, but in September, all of my customers will go somewhere else. They're snowbirds. They'll go somewhere else. So understanding when you can support debt, when you can't support debt is also a good part of being ready for asking for any kind of financing request. As we move into the bottom section, which is expenses, again, these are not all inclusive, but you can look at salaries and wages, for example. So if you're planning on taking pay out of your business right out of the gate, you need to make sure that you've accounted for that. Or maybe you think, I want to be a hands-off operator, I need to hire someone. Okay, that's fine, but look at what that does to your bottom line. So we're going to ask you really to go through and just demonstrate that you've put thought into all the different ways that you could you could have to pay money to keep the doors open on this bakery. So we really could spend a great deal of time on projections. And I do think when I send people to any of the free resources that we have for business coaching, this is where they spend the bulk of their time. Putting a business plan together is typically just pulling out the info. Projections, they're painful because you really have to put thought into these numbers and they have to make sense. So you're going to hear me plug again and again SCORE Mentors throughout this presentation, but if I really truly don't recommend doing this alone. Find an expert to help you and make sure that these numbers are real, because as a startup, this is it. This is the lifeblood of your financial request. All right. Next slide, please. I think I'm back on track. Should I pause? Any questions, Hannah? Are we good?
I haven't seen anything come through yet, although I see Kristen, or is that your hand quietly raising? No? Yes? You've got to unmute yourself because you're muted right now.
I have questions, but I can save them for the end.
That's up to you. We are, yeah, we're wrapping up the agenda here pretty quick. So, we'll talk about our next couple things, Kristen, and then we'll come right back to you. So, as we talked about at the very beginning, there is a common misconception. Business credit scores are a thing. That's not a myth. But they're typically for large corporations, and they are only issued by certain institutions. So the banks that you are going to be doing business with at this point in your process, it is very unlikely that they're going to pull a business credit score. They're going to be basing it entirely on all the other steps that we've covered and your personal credit worthiness. So you need to know your credit score. I cannot say this with enough emphasis. You need to know your credit score. You need to know your credit score. And we're really fortunate. We actually live in a day and age where it's really not that hard to know your credit score. So there are any number of credit scoring programs that give you at least a general idea where you fall on the broad spectrum. I don't know if I'm allowed to actually give recommendations on these, but you'd have really good karma if you used some of the ones that are available for free out there, if you're picking up what I'm putting down. It honestly, it is a baseline expectation. If I have a business customer sitting in front of me that has no idea what their credit profile looks like, that is a major red flag. And we do look at character of the borrower as one of those components in small business lending. So if I have someone who can't demonstrate they have any idea at all what their financial position is, that's a step back immediately. So I have to have you know what your credit score is at the beginning of the process, because sometimes it's a deal breaker and other times it's not, but I can't address what I don't know is going to be an issue. So a good piece of guidance for you, no matter who you choose to do business with, no matter who you choose to partner with from a financial perspective, you will be better served by being very, very honest with them right out of the gate. Anything that could pop up, they're going to find it anyway. And it will just make your process so much cleaner and so much easier if you're honest with them right out of the gate, and they can help you. I mean, that's our job. I don't judge. When I have someone who's had credit concerns, it's not my job to judge where they've been and what they've done. My job is to figure out, all right, well, how do we get you where you need to be? And that, I think you'll find that's how we all operate. Everybody that is in these roles is here because we are invested in small business in Maine. So, okay. I think I've skipped over some things. So, oh, yes. So I know not everybody has these conversations every day. So can we go to the next slide? I forgot I kind of built some bouncy slides in here. We're back and forth a little bit. So this is a good example of a credit score chart. I just pulled one from Experian, which is one of the credit bureaus. And in general, it's telling you that you should be somewhere above 670. So poor and fair, those are really difficult buckets to receive any kind of financing, whether you're talking consumer or business financing. So in this particular model, it's telling you to, shoot for 670 and above. 850 is the highest you can receive. I have never had an 850 customer ever, ever, ever. So if you are, I tell people, anything above like 720, you're aces, you're doing great. Anything between that 720 and 670, we're still in good shape. We have ways we can help. We may have some suggestions on bumping you to that next bucket, but you're doing very well. And I use the term bucket because it's just an easier way to explain things, because every model does do the math just a little bit differently. So I tell people, find what bucket you're in and then tell your banker I fall in this bucket. And they'll know what they're dealing with from a credit perspective. Next slide, please. So another part of your personal credit is understanding your debt to income ratio. So sometimes that can be something, you may have made all your payments on time forever and ever and ever, but your credit score is still sitting a little bit lower than you thought it was. Could be your debt to income ratio. So that's a mathematical calculation that just takes all of your monthly debt payments and divides it by your gross monthly income. And it's an indicator that lenders use to measure your ability to manage your monthly payments. So if your debt to income ratio is higher than we like, it means you may not have enough money to pay all of those debts if we put our debt in there as well. So can we have the next slide, please? So I put a visual together for this one as well, because it can be complicated if you're not familiar with this particular calculation. So let's say you have $5,000 in monthly income and you have $2,000 in monthly debts. Your debt to income ratio is going to be roughly 40%. And every bank is a little bit different, but that's about the right place where a bank likes you to be. Some allow a little bit more give, but I would say if you're in that 40% range, you are financeable. So probably I'm reading your mind and you're like, wow, 40% is a really low number. Like, what am I going to do with the rest of my money? I still have 60% of my money available. Well, it does not include all the deductions. So remember that this is gross. So you're going to have your insurances and you're going to have your retirement and you're going to have all of the other deductions taken out. And it doesn't include things like I'm going to get groceries and I'm going to get gas. And so it really truly just calculates when we're looking at debt to income. We're just looking at what's on your credit report, not really what it takes to live your life every day. So if you shrink that number back down, or if you add all of those in rather, it does shrink that number back down. And I think you'll be surprised. I've had people who we've done this class together and they're like, whoa, I don't have any money left. Yeah, well, I know. So next slide, please. And then the personal guarantee. So this goes along with people not understanding that the business is not a standalone. You are the business. So any kind of small business, you are it. So we do look for, or the success of the business, it falls on your shoulders. So we look for the customer to have, for lack of a better term, skin in the game. So we ask customers, not only are you being asked to put money in for your down payment, but we're also going to ask you to personally guarantee the loan. And all that means is, let's say something happens and you're like, whoa, this is not for me. I am not going to sell cake. I'm not going to bake cakes anymore. Or there's some other reason why you have to close the doors, or there's a family dispute and you have to dissolve the business. I've seen it all. We're still going to come back and say, yeah, okay, Hannah shut down her cake baking business. We would like Hannah to personally arrange to make sure this debt is repaid. So the way I explain it to people is you are personally obligated to repay this loan, whether the business survives or not. Okay, next slide, please. So I think the timing was pretty good. We have some time left. I know Kristen has some questions. I just really, again, the idea behind this is to mentally prepare you for here are all the steps that I can take ahead of time so that my meeting with my banker is productive and efficient, and they know that I've done my homework. I really hope that you guys have found this helpful. And that has demystified some of the business loan application process. And it really is just the tip of the iceberg. As you can imagine, we could have broken down any one of those 5 topics and spent an hour or more going over each of them individually. But we didn't have that kind of time today because I had to save time for questions. So it's an exciting, we're very lucky. I don't know if you guys were on the call when we were talking about the SCORE award, but we have such a vibrant startup culture in Maine, and it really is due to, in part, the partnership between all of the different resources that are available. We're not competing. These resources are not competing for your business. They're literally just making sure you have the right resource to be successful. So at the very end of this slide, there are some websites. Not the next slide, I mean. There are some websites. So I put the SCORE Maine website on there for you. SCORE National. So SCORE Maine is very geared towards what we have in Maine. So I would start there. SCORE National has some very general resources. Some of the resources there are maybe a little bit bigger than what we need here, but it's not a bad place to do some digging around. And then, of course, there's small business development centers. We have them all over the state of Maine, and they're also a great partner. So, finding the right partner to help you is an important part of this process. So feel free to kick tires on all of them.
I'd like to add, Nicole, we all work together. And
Yeah.
so, there's no closed door. If I think SBDC is a better resource for my client, then I will connect them with someone who's there. So I think that's the other magic we have in Maine is we all know each other. And so we're really good about, oh, the person's a veteran. So guess what? We're going to plug them in there because they've got a better idea. So thank you.
Yeah, absolutely. We are a community. The small business community is truly, we all know each other. So, all right. So questions. Kristen, we promised you the floor.
All right. First, I wanted to know does it hurt to apply for a business loan and either get rejected, or does it have an effect on your credit score?
Yes, it has an effect on your credit score because we do pull credit. We don't pull credit until, so I'm going to back up. If you are interested in applying for a business loan, it is never too early to connect with a banker and find that fit. So, and I joke about kicking the tires, but it's true. Your banker's your partner, and you have to find somebody you're really comfortable working with. So if even if it's within the next 3 years, I'm going to have a business loan need, meeting with bankers, finding the right fit, really, really important. Because one thing that we will do is we will give you guidance on what the process looks like. So for most of us, we aren't going, credit is the very last thing that we do. We're going to do all the other stuff first, because once you pull credit, it impacts credit, right? Every inquiry has an impact. So we really, if my customer has truly been honest with me, I absolutely know whether or not a loan's getting approved before we've even put in an application, because we've done all the other stuff first. So I guess that's sort of a roundabout way of saying, yes, we're going to pull credit, but no, it's not too early to start exploring those conversations and starting the process of a business loan application, because a good lender is not going to let you just pull credit without doing all that work first.
Okay. And so I have several questions, but
good.
To apply, I'm like looking at different banks and you just said like finding the right person and then like it's a conversation and a meeting. That's the process of applying for a business loan is?
Typically, so I'll talk about my process. So I'll do a pre-screening call with a customer. I mean, if you walk in my door, I'm gonna sit down and meet with you. But typically, I'll do some sort of pre-screening call with a customer to ask some questions, dig around a little bit, see how far into this process they've gone. Because I'm busy, but you're busy, you know. So I don't want to drag you in here to sit down and have a physical meeting if I know, well, there are pieces that you could do to prep for that meeting that will make our time much more effective. So that would be my expectation of when you're meeting with bankers is you're having sort of that pre-screening call. You're getting a feel for them. They should be asking some of these agenda questions of you, like how many of these things have you done? If you're like, well, I know I need a business plan, but I haven't done it, I'm going to say, okay, let me send you to SCORE Maine, connect with a mentor, get to work on your business plan now, because we'll need a business plan before we can go in, you know, before we do anything, we're going to need to have a business plan. So we're going to go through sort of those pre-screening questions. And then, yeah, sitting down typically and going over things together. It's an important part of the process. There are questions you'll think of as we're talking, as you're going through the homework, you'll have tons more questions. So having that time to sit down and do it together, I think is very important.
Okay. All right. And then, so my business idea, I have a business plan. It's a comprehensive 33-page plan. It includes projections. I did find that to be kind of a little difficult in that, like, some things I'm just making up, like how many customers are coming in every day. But I feel like I was realistic about it. And but it is a business that is pretty novel and it's experience based, and there isn't really something like it already in Portland. And so I guess I'm wondering, like, how likely is it to be funded with a sort of novel business idea with, like, I have some like proof of concept, but not really, like, I don't have any business. I can't give you any tax returns because it's not a business yet. And it can't really be that business without the money to be the business.
Yeah. So you are a big time full-fledged startup. We can certainly, I can give you some general, you know, for the sake of the audience and the time. It's not, it depends. So in that particular case, we're going to look at some outside factors, which we didn't really talk about today, but like, do you have a full-time job that you plan on keeping while you roll this business out? Or do you have a substantial amount of family support, you know, a spouse or a parent? Or so there's some other kind of weird things that we can look at. Sometimes we have to get very creative with how we put together a deal. Maybe a bank will only do a small part of the financing, and then we look at pulling in a community development financial institution to do a small part. So everybody kind of has a small-ish piece of the pie, and no one group is taking on a high risk. There's a lot of different ways we probably would look at putting something together. We can talk offline if you want, and I can kind of get more into the nitty-gritty with, you know, what would it look like?
Okay.
Another thing I would add is when we've had some SCORE clients who have like an unusual business idea, right? That it's going to be pretty hard to make estimates on costs on customers. Is sometimes we've done a pop-up events, and so the pop-up events don't necessarily require for you to get money per se. And it's a way to kind of refine your business idea, right? Oh, you know, geez, I thought it was going to be 80% female, and it turns out it's 50% female. So one thought is to kind of experiment on a small scale, and that's going to give you more data, which is also going to help you with the banker, but it's going to help you kind of refine that plan. And so, an example, someone we worked with had bought kind of a big business space, like real estate, and she wanted to do like a farmer's market and other things. And we kind of said, why don't you just do a pop-up one Saturday, advertise it, see what's happening, who comes, what's going on. So that's one thought is to kind of just dip your toe in before you think about asking for money.
Yeah. That's great. That was actually one of my questions that it was, do you think it's best to do pop-ups to show proof of concept to the bank? And then I guess I'll just say my last question is, I have a daughter that will be going to college not in 2 years. And do you have any insight about the application for applying for a small business loan in conjunction with paying for college and like the intensive, I know they go really in depth.
Yeah, that's a harder question.
Yeah.
So I have a daughter that's graduating this year, and so we are right smack in the middle of how do we pay for college. I honestly can't answer the question, Kristen, because things have changed so substantially with how student loans are handled. I think it's really going to be where things are at the time that you are looking to take on any potential student debt. I would plan that you need to manage that debt. That's what I would plan for. Now, whether or not that's the way it will work, I would need a crystal ball to predict. But I guess to put yourself in, I'll plan for worst case scenario, and then maybe things won't be quite this difficult, but I would plan that any debt that you take on, you will have to be able to show you manage in that debt to income ratio.
Okay.
And stay strong, sister, because this is hard.
Yeah.
Yeah. We're coming up on time, but I did want to shout out one other question that we had in the chat. Someone asked, what is debt ceiling? Is that a term you can define, Nicole, before we wrap up?
It's how high we'll let your debt go before we've said no, you have too much debt. You might hear excessive debt as another term, which I think is a little bit aggressive. But it's an indication on that debt to income ratio, how high we'll let your debt go before we say, you need to manage your debt further before you can take on any more.
Great. Any last quick questions before we wrap up for the afternoon?
So if you think of something, or you were too shy to speak up today, or you've processed this in the shower tonight and said, oh, I should have asked that. My email is at the end of this slideshow, which will go out. So just shoot me an email. If I'm not, if you're not looking to work with Camden or not looking to work with me, don't feel like you can't use me as a resource, because I am a subject matter expert for SCORE. So I wear multiple hats, and I'm happy to answer your question, whether you're doing business here or not. I think that is an important distinction to make as we're wrapping up our time together. You don't have to be my customer for me to give you guidance and direction.
Yeah, Nicole, this has just been, I think, very, very helpful. And also, this is being recorded, as Hannah mentioned. So if you have friends who couldn't come today, or thought they could come and then weren't able to come, this will be on the Bangor Public Library's website. And I think it's really just these are tough, these are tough things to answer when I love your analogy of the cake baking is all I want to do is bake a cake. Like now she's asking me debt ceiling, like you're kidding me.
Mm-hmm.
So I think this kind of really helps people prepare before they have that initial discussion. And 20 years of experience, you sat across a lot of people who wanted to borrow money. So thank you for sharing that with us.
My pleasure. It's always fun.
Yeah, thank you again, Nicole, and thanks everyone for joining us. Have a great rest of your afternoon.
Thank you.